What we're seeing now is really an economy that seems to be at an inflection point, and that's because of widespread vaccination and strong fiscal support, strong monetary policy support. We feel like we're at a place where the economy is about to start growing much more quickly and job creation coming in much more quickly. So the principal risk to our economy right now really is that the disease would spread again.
As Fed Chair Jay Powell speaking on CBS 60 Minutes in an interview that aired last night that's ahead of the U.S. data on Tuesday on CPI. Joining us now, Michael McKee, Bloomberg International Economics and Policy Correspondent. Mike, this was like his plea to the people, basically.
Yeah, explaining what Wall Street's already heard to the rest of America. Let me walk you through it here. Here's what Jay Powell is talking about. A long time ago, when Alex was a little girl, there was a president called Ronald Reagan, and growth in 1984 was about as high as you can get. It was very, very strong, about 8% that year. And we haven't seen anything like that since then. But you look, you see the white line down there. That was last year. That was the pandemic condemning the economy to negative growth. And then look what the forecast is. The highest since the Reagan years in 1984. That's what Jay Powell is talking about. What are they waiting for then? Why are they not raising rates? Well, they've changed their mind about how the economy works and inflation dynamics, and now they're looking at how far can we bring down unemployment. And here's a couple measures of what they're going to be looking at. The employment to population ratio in white, and the orange line is the black employment to population ratio. And those numbers should be 2 to 3% higher than they are now. And the Fed's going to try to get them up there, which of course raises the question of what could go wrong. Well, obviously, the thing that's on everybody's mind is inflation, and we're watching the inflation numbers to see if they indeed start to rise. The forecast is, obviously, we're going to get some more inflation in coming months because of the base effects, the fact that we're comparing to a drop last year. But the other issue, along with inflation, and you can see the forecast there, and the question, of course, is that sustainable? But the other issue is the stock market. Mohamed El-Erian writing about this today in Bloomberg Opinion. You can see that the price-earnings ratio has skyrocketed. And Lou Wang at Bloomberg also has a great piece today suggesting that even in 2023, earnings won't justify that kind of elevation. So does the stock market turn into a bubble before the Fed acts? Does inflation take off before the Fed acts? Those are going to be the questions that Wall Street and Main Street are going to be talking about for the rest of this year.